Hey, so I want to look at Netflix. Last time we looked at them was on June 10th, so it's been about a month and a half. I know they had their earnings come out recently. So the plan is we'll just go through some of the news that's been going on since June 10th, roughly. Then we'll look at their quarter earnings, and then we'll wrap up with a technical analysis just to see uh, if any of our buy points change resistance, if now just overall is a good time to buy. Uh, but yeah, let's just go into the news. And as we go through, if you have any questions, feel free to ask them and I'll do my best to answer them. Or if you can add insight, that'd be great too. But going back to the beginning, so we're actually going a little bit before that time of June 10th. And that's to share that, again, Netflix was bringing this password crackdown to America. I believe they started in like Latin America, maybe even some Asian, Southeast Asian countries. And now they're bringing it over here. And again, the goal is to limit people sharing their Netflix account with multiple other people. This is mainly just to potentially limit that and therefore add users because now people who were getting Netflix access for free essentially are now going to pay. That's kind of the thinking here. So we'll see how this kind of plays out. I think it's, I, well, I can just tell you, looking at the earnings, it looks like it's started to take effect. I want to see the next quarter. That'll kind of give us a real sense of is that actually working, especially here in their North America region, which includes us. But moving along, so apparently they had a pop-up restaurant in LA, just something new. I don't think that's going to impact the company at all, but just something new that they tried. They had this thing called Bites, where they brought on some like celebrity chefs, I mean, to the restaurant to uh, just kind of stir up some interest there. Uh, Next, we had HBO reportedly was in talks to license shows to Netflix. And so we left a little note here just saying that this possibly is due to the strategy of making the show and then licensing it out is the better strategy as opposed to making the show and then having its own streaming app. That seemed to be the thing to do for all these media companies. They would make this show, and they saw Netflix was doing so well that all of a sudden we're seeing Hulu, Peacock, Disney Plus, like all these different streaming apps. But I guess HBO is one of the ones that possibly will change that because they're not seeing the revenue growth that someone like Netflix experienced. Uh, but we'll see how that kind of evolves over time. Next, apparently, Netflix was considering purchasing Paramount. That's another one. They created their own streaming service. This didn't actually go through, but apparently, just the thought of it really boosted Paramount stock. So again, we'll see if Netflix does make any type of purchase here in the near future. It looks like they're trying to add content. Next, we have, and this brings us more towards the end of June, there was this strike. I believe it's still ongoing. A potential double strike adds another twist to the Hollywood drama. And of course, this impacts Netflix due to they're in that line of business. So if these producers of content are on strike, that means Netflix is probably not going to be able to produce any content, new content. I mean, that goes for all of that industry, but still, it's going to impact them. And so here we have a lot, but it is just four articles. I just broke it out here. So these top two, that was towards the beginning of July, and then the second two is really just what happened this past week in terms of updates. So going back to the top two, Netflix said to increase targeting, create enhanced formats to boost ad sales. Uh, I have to imagine this is a mixture of these people are going to have to, uh, and when I say these people, I mean the people that were having Netflix access for free essentially by using a friend's account or something like that. They will want to gain those people. Those are potential customers. And then along with that is, whenever they came up with this idea, they had uh, a contingent idea, or just a separate idea with it that said, well, these people might not have the financial means, so let's have an ad-based layer to Netflix, which would be, of course, cheaper, but the trade-off would be you're paying less, but you're now seeing ads where a normal user, or like, I guess, the basic, or I'm not sure what they label it, but that basic user, they won't see the ads. And so I think they're trying to target those people, and they also want specific ads to target them, but also for them to watch, because that's going to be a revenue stream for this platform. We also have Goldman, which is a financial analyst group. They upgraded Netflix ahead of quarter 2, which we will get to those earnings here very shortly. These are the last 2 articles before we do jump to that. We also had Netflix earnings call. Page sharing is the key to revamping revenue. So they reported earnings, I believe, the 17th. So not too long ago, earlier in the week. And so I just kind of like this thing that Netflix is continually coming out with new ideas to try to just gather more revenue in different ways. So I really like this. So now what they're doing, since they had this lockdown, and potentially maybe they're doing this because they didn't see the pop like they thought they would, potentially. I still think it needs more time to evolve, but this, what I'm imagining is those people that were using that Netflix account, for whatever reason, to get the ad-based Netflix might be, say, $10. They're not willing to do that, but maybe the person who already has the Netflix account, maybe they'll just add on an extra $1 or $2 each month, and that would allow them, this former user, to now be a user again, under the same umbrella. It helps increase revenue, not as much, but still it kind of captures that in-between audience. So we'll see how that plays out. And then, of course, to wrap up the news segment, is a Hollywood studios offered actors $1 billion in compensation benefits before the strike. So that just shows how much more they want, or I guess it doesn't say how much more they want, but it shows that that amount was not enough. So that covers the news. Let's pivot into the earnings report, and we'll just try to breeze through this, but given it its attention. So earnings per share, they got $3.29, which beat by 44 cents. So good. That kind of shows what we wanted to see. We wanted to see that growth, but we saw revenue miss. So that's kind of a surprise, especially because we would have imagined that they would have gained more users, and yet they're missing on revenue. So something's off there, but it seems like the bottom line in terms of actual income went up. So kind of mixed here. Again, we had the revenue at about $8.2 billion, which is growth of about 2 to 3%. Again, this really is, Netflix is turning into a value type company. They're not getting these high growth numbers that we saw way long ago. But continuing on, we have growth was driven by a 6% increase in average paid membership. Again, we'll go into their financial statements and a couple other separate reports that kind of help paint a better picture here. Global streaming paid memberships went up close to 6 million users, so that's a nice pop. We also saw Q3 guidance revenue is expected, or at least they're projecting, $8.5 billion. Apparently the estimates are for close to 8.7. So still, we're in the ballpark, but it's not where it should be. We want it to be a little bit higher. But overall, that would be about 7 to 8% growth year over year. Operating income of 1.89 billion and diluted earnings per share, they're forecasting $3.52, where the estimates from the analysts are saying $3.23. So again, we're actually going to forecast out uh, similar type of results here. They're planning on beating earnings per share, but the revenue is going to be under expectations. Of course, we'll see how this kind of evolves. So now we're going into this just shows it's kind of like a unique version of the income statement here where it shows the revenue, operating income, operating margin, and then it shows the members. And we also highlight the cash provided by the operations. So just a couple things that I have highlighted here. So revenue in last year was about, I'll just round up to $8 billion. They're forecasting for 8.5, and then right here, the kind of shaded in gray bar here. Didn't grow that much, but again, there was that 2 to 3%. They're projecting closer to 7 to 8% next quarter in terms of revenue. So it's picking up. Hopefully, that's due to them just adding new members and actually getting a bump in revenue for a full quarter as opposed to maybe 2 months in the quarter, 1 month of the quarter. This should be a full quarter where they're seeing that results, and hopefully that's kind of what plays out. In terms of operating income, we're seeing 22% margin. Last year was close to 20, so that's good. Seeing better margins. In terms of the income, again, went up a little bit from about 1.5, 1.6 to close to like 1.9 billion in terms of forecast. And in terms of just the actual results, it still went up about 250 million. So that's pretty good, as long as it's going up. We didn't highlight it, but earnings per share. So it looks like to close out last year, so they did beat compared to year over year. Relatively flat though, but they did beat it. Next quarter, again, they're projecting to win. And that's really going to be the make or break for Netflix. They're continually beating by a little bit. It looks like the gap's widening, especially for quarter three, which that's, again, what we want to see. That's what we're kind of expecting. And then quarter four, that's going to be the make or break for this. I'm not sure what happened in the quarter four for 22 that caused it to dip so far. But if we continue to see like a $3 earnings per share in Q4, that should do wonders for the company in terms of year-over-year growth, and hopefully gets a pop in terms of stock price. Then again, going into the paid memberships, so we're seeing 8% growth year over year. That's good. Going from about 220 to 221 all the way up to 238. That's good. I hope we see that continue to grow, hopefully push into like the 10 to 12%, just double digits will be great, but seeing it kind of reaccelerate, that's a good sign. That means this is actually playing out as we expected. We didn't really guess how much it could improve, but we understood the potential. So again, we'll see if that continues to grow. Hopefully it does. And then net cash provided by operating activities. Just had to point out the big difference here in terms of year over year, where maybe they just had a bad quarter and that's what's driving this. But they did pretty well considering most of 22. We're seeing 3 quarters here. They pretty much combined all that into 1 quarter. Yes, it's a drop off from previous quarter, which is still under the 2023 umbrella. So they're crushing it this year. But let's move on to, so here's what the analysts are saying. So this brings us out to end of 2024. And we do have a good mix. It starts with 30 analysts all the way down to 10 analysts, which is still a good variety of people. So this should give us a generally good sense considering the number of analysts following this. But year-over-year growth for the revenue, uh, first off, this was about, we mentioned earlier, about 2 to 3%. So they missed on this. And again, the revenue missed there just by a little bit. But going into next quarter, they think it's going to grow more. We'll just assume they're going to miss by about the same. So potentially 7%. That seems reasonable. They'll probably miss on this just by a little bit. Q4 is going to be huge for this company if they can reaccelerate. And again, the fact that majority of analysts believe this, uh, going from 30 to 29 over the next 2 quarters to bring us through the end of 23, they're fully believing that this is going to reaccelerate into the 10% revenue growth. If that happens, that could be phenomenal for this company. And that's why we're following it. Moving on, so this is a breakdown of just the different regions. So North America, this is the one that we're really watching because, again, we mentioned in the news segment how they're bringing out that restrictions on, sharing passwords. And so it seems like we're starting to see the impact because right here we have this paid net additions. We're seeing about 1.2 million new users. Hopefully, when we see a full Q3, if we see a pop in that to like 4 or 5, up to like 10 million, that would be incredible for this, a real like comeback story. But in terms of revenue, kind of flat in the North America region. Paid memberships went up slightly. And again, new additions, that's nice. We do want to see that. Revenue per membership actually went up slightly. So I'm sure we must have mentioned this because this is the only way I can imagine that happening, is they must have raised the prices a little bit because otherwise I thought this would have pulled back. But maybe not. Maybe once someone was forced to pick up a Netflix plan because they couldn't use their friend's Netflix account, maybe they just went the full way. There was no guarantee that they were going to just do the ad-based subscription plan. They could just do exactly what their friend's doing. So maybe that's occurring more than opposed to the ads. People just don't want the ads. Next we have, I believe this is Mid-America. Let me see. No, this is Europe, Middle East, and I forget what the other A is. I guess Africa, like the middle of the country or the world. Revenue, again, went up slightly, so that's decent. Net additions, we saw a big pop here. So they must have rolled it out in a couple Europe regions or countries, and that's why we saw a pop. But again, we saw a pop before in the 3 million, so all I know is this gives me the sense that it is working. And we saw a revenue per membership. This one pulled back a little bit. Not too much, though. But still, it pulled back. This is more in line with what I would have expected to see. Revenue per membership pull back a little bit when the additions continue to grow. We didn't see it in the North America region, but we are seeing it here. But overall, it seems like it's growing. And especially if they're getting new memberships, even more potential to continue to grow. Next, we have the Latin American region, and then we have the Asian Pacific region down at the bottom. Starting with the Latin America, we had revenue again kind of stay flat, but the net additions went up, of course, and we saw the average revenue per membership pull back just a little bit. Again, that's kind of what we expected. Year-over-year growth. Okay. Right. Yeah, that checks out. And then Asian Pacific, revenue stayed the same. They're getting the additions though. It's been in the 1 million range. If anything, this kind of pulled back. So that's interesting. Revenue per membership, that decreased. That's kind of in line, but I would have thought to see a bigger net addition pop than this. So that's the tricky one. I guess the good news is this one's like, it's not the most popular. Like these two regions are the most popular, where we have in the 70 millions for both these regions, and then we get down here, it's more like half, but still, that's a decent chunk for this company. Here we just have now a more detailed income statement here. So just looking at the revenues, quarter over quarter, not much of a change. Even the revenues in terms of the 6 months period, so half the year, it went up, maybe 500 million, I believe. But all of it really just went to cost of revenue, so like producing their own stuff, I imagine. We did see a little dip in terms of quarter over quarter, not much, but like 100 million. We also saw marketing tick up a little bit. So that kind of makes sense based on their ads. We saw that one article saying how marketing is going to be a big thing for them. Operating income, we're seeing this go up, which is great. We want to see that continue to go up. But in terms of just the full year so far, we haven't really seen it yet. In fact, we're slightly down, but relatively flat when you look how large the numbers are. Year over year, though, in terms of operating income, we are seeing a improvement there. So clearly, the first quarter for last year must have done very well. We saw a drop in that, but here we are today. We're seeing an improvement for this quarter, especially compared to last year, and even a little improvement compared to last quarter. A couple other things here. We have the net income. Again, we're seeing pretty strong improvement here quarter over quarter. When we look at the 6 month ended, we're actually seeing a slight pullback, which is okay. So we saw strong earnings per share through the first 6 months of 22. Kind of maintaining pace here in 23. The big factor again will be what will it do in Q4. Q4 is the big one because as we saw it last year, Q4 was terrible. Didn't even hit $1. Didn't even hit like 25 cents. So we'll see how they, play out the rest of the year. Here, just a couple things. This is their balance sheet, just a quick snippet of it. Cash has gone up tremendously. And this is comparing, here we have Q2, so that's now, versus year end back in December. So just a change of 6 months. Yeah, cash went up a ton. Cash is so high that when we look at current liabilities, it could almost pay all of them just instantly. So overall, healthy balance sheet. That's all I need to point out there. And then the last thing was cash flows from financing activity. I just wanted to point out how this is a big difference that's happening this year compared to last year is they're repurchasing their stock. This again is like, I believe this is in the millions or in the thousands. So they repurchased $1 billion in their stock. And if they have all that cash, might as well do it. That should help drive the price up too. Common strategy. And they didn't do this at all last year. So that pretty much wraps up the earnings. What I want to close with is the technical analysis. Just see if it's a good time for this company. Let me open that back up. So going back, let's zoom in a little bit. Again, we looked at this on June 10th last, which was right around here. We had a price noted at 420. That's right here. Since then, it was going up, nice and steadily going up. After earnings, it actually pulled back. Not really what I wanted to see. The earnings didn't really pop the way we expected, especially in terms of like actual money. Memberships, yeah, that went up. We saw a nice improvement in terms of memberships. I guess I'm still comfortable with this idea. So this purple line was like an estimation. We drew this in a while ago. We probably tweaked it a little bit because, but I've tried to keep it the same, just to see how it plays out. So I think we like just drew this in, and then right around here, this was the area where we're like, okay, we see what Netflix is trying to do. Let's try to forecast that out. And it's kind of played out as expected. Uh, we kind of thought it would dip earlier. Here now it's dipping. We also thought it would be flat where it went up a little bit early. But overall, it's kind of given the same sense to a degree. But anyway, so we thought that right now, when we got this quarters report, uh, we thought it would be around here, the top of the range, and it is there. It's actually exceeded where we thought it would be. It's following a different pattern. I thought throughout that quarter it would kind of, pull back a little bit, then start accelerating, and then once we actually got the earnings, it would end up here. Uh, but instead, people got, I think, just like us, we got excited that during this quarter, it was going to have these tremendous results. All of a sudden, it didn't happen that way. But we realized that, again, the fact that they were rolling it out into America during their second quarter, we would only see partial results. And so that's why we drew this kind of accelerated uptrend in Q3, uh, which we'll see how that plays out. I think that's how it should go, because again, the thinking is now that we have a full quarter of this password crackdown, that's when we should see the true results on a region like the North American region. We'll see how it plays out. But for now, let's just kind of update this. And it might be best if I just share this before we make any changes. So we have Netflix here. On June 10th, it was trading at 420. We had buy points way down at 330 and 350 with resistance at 570. We also noted that, let me just do this, that this short-term uptrend began in May of 22, and we're expecting high growth for Q2. We didn't really see that. We kind of saw it for the members, but the revenue didn't correlate like we thought it would. But let's just kind of go with what we know now. So currently, we can just update that. It went from 420 to 427, so not that much of a change. A buy point for us, so if we scale out, we have a couple points here. We have this 330 down here. We kind of just saw some support going way back into like 2018, 2019. Here's a point at 2020 where, yes, it dipped below, but came right back within the next week. A little hesitation here in 22. And then most recently, once it kind of got above, I guess we can say back in here in January of 23, it peaked above and then came right back down, keeping this uptrend though that we marked out in yellow. Peaked below just for a couple weeks, came right back, hovered around 330. So for whatever reason, 330 seems to be a decent support line. We'll keep it in. It's kind of running away from that point, but there's no reason why I couldn't pull back, say next year or somewhere down the road. So it's not too far away that I see a reason to remove it at this time. So we'll keep it in. 350, looking at the charts and going back to June 8th, 350 was, what is 350 actually? Oh, I see what I did. Okay, so 350, that was me just realizing I'm probably not going to get back to Netflix until like mid-July, and here we are. And so around mid-July, that's 350. So that makes sense. So what we're going to do right there is we can update that. So here we are, July 22nd. We'll just jump out to about August 22nd to find the low of this channel. So we'll say about 372. So I'm going to update 350 to 372. And Obviously, that's not like exact because as we kind of progress here, and let me zoom in, like this week exactly, the bottom of the channel is down at 356 roughly. Next week it'd be at like 358, and every week it's just going to go up like a couple dollars all the way till the next time we're expecting to get back to this. Should be around 372 in terms of the bottom of that channel. But scrolling out a little bit, we have a couple blue lines here, which for me are like fair value points. Whenever I see this, and based on where we are, it's kind of setting up very similar to May of 2020, where it's kind of finding this range here between about 420, 450. So it's kind of hesitating here. I believe what could happen with this one is once we get above 470, that might just be the new hangout spot between like 470, 570. Of course, we're not there yet, and we just got a strong pullback this week. So where I would imagine it would stop if it wants to keep pulling back, again, the bottom of the channel. If it broke to 330, that would be kind of bad. We could still argue it's in an uptrend. It's just we would have to pull it down like significantly. Like the uptrend that it's currently in, that would be broken. But no reason for that to happen. I would imagine this uptrend will continue. If anything, it's kind of a relief that it's pulling back into the range. But yeah, we'll keep tracking this. I think one thing I want to add, because I've been doing this with others, is if I had to forecast what I think this price is going to be at the end of the third quarter, so right around here, I'm going to guess it's going to be in this type of range. So what I did is I'm picking roughly like the upper half of that uptrend. I think we'll hang out in that range. We might dip below, but I think around next time earnings come out, we'll kind of be in that range, possibly even higher. And so I wanted to capture at least the bottom of 470, because I think if once we crack 470, that might act as support for this. Again, we'll see, but that's I can see that type of instance occurring. So again, in terms of a buy point for me, let me see, what's this other blue line? Nothing too crazy. If anything, what I want to do just for fun is I want to call out what looks like 416. This might be a support line for us. It acted as support slightly back in like 2020. It might do it again. It already kind of looks like it might be doing that now. I'm going to draw it in like half sized just so we note it, but not going to give it too much attention at this time. And you know, I might do the same thing right around like 450. Just so we can kind of get as much support here, because that kind of just is happening right now. I don't think that'll be lasting too long. Hopefully, if anything, it breaks to the upside, and then 470 starts acting like the support line for us. But yeah, in terms of a buy, 330, I would love that number. 372, again, that would be the bottom of the channel. But I'm going to put also in here, I'm going to put in 416. 416 is this light blue line that we just drew in. I'm not going to give that one favoritism yet. So the number that I'm going to be looking for is about 372. And again, that's not the ideal number this week exactly, but just over time, as long as this uptrend continues, which it still is in effect, So that's short-term uptrend since May of 22. Been a full year now. We're in that thing. Expected high growth for Q2. Didn't really get it, but I'm just going to remove that to keep things simple. Let me update the date to today. So 372, that's the mark. And just thinking, quarters ahead, if it pulled back to like 372 now, say early next week, mid next week, I'd be very tempted to pick up a share or two because that's a decent dip for what this one's currently doing. In terms of resistance on this one, we had 570. That's this red line up here. 570, that is this consolidation period it had between 470 and 570. So that's a mile away. At this point, it looks like I kind of skimped out on the resistance points by having just that one. I think what we'll do is add in that light blue line that we called out, 450. Again, that's a very minor point, but as we're seeing, it's kind of slowing it down. Obviously, if they would have had like great earnings where they beat on both revenue and earnings per share, I think this would have just continued upward at a faster pace. But we got the results, and so we'll just play it. Another resistance point for this would be similar to what we did before. If we go out about a month, the top of the range would be about, what is that, 437. So 437. And for now, just like I did with the buy points following this yellow channel, we're going to do the same with a buy point at, the resistance point would be 437. I'm not looking to pay over that at this point. Right now, being at 427, it's definitely at the top of the range. And even if we look at this week exactly, the resistance point's really 420 right now. And the fact that it's at 427, that's kind of pushing it. But overall, because of what we're expecting in Q3 in terms of results for North America, I'm going to leave it blue as it's fair. It's definitely on the high end of this, but it's still in that range that we're looking for. I guess it'd be fair to say I'm not looking to add this one at this point. So yeah, that wraps this up. If you have any questions, like I mentioned earlier, want to add any insight to anything, feel free to add a comment down below. But this wraps it up. So just a quick recap. Netflix currently trading at 427. Buy points that I have marked are 330, 372, and 416. 372 right now is my magic number. In terms of resistance, I'm seeing 437, 450, and then 570. 437 is the resistance point I'm paying attention to right now and over the next month, really. So yeah, again, that wraps this up. Please like, subscribe, and I'll see you on the next one. Bye.